Assalamu alaikum everyone. I am Mohammad Shad Khan, VAT expert. Welcome to our YouTube channel, Sheikh Anwar Accounting and Auditing LLC, your go-to source for UAE tax and compliance update. Today, we will talk about the significant changes to the UAE VAT law introduced through Cabinet Decision number 100 of 2024. On September 6, 2024, the UAE Federal Tax Authority issued Cabinet Decision number 100 of 2024, a landmark change that brings new regulation to the UAE VAT framework. This decision will affect on November 15, 2024. However, some amendments are retroactive, meaning they apply to transactions dating back to January 1, 2018. This is substantial update affecting nearly half of VAT regulation. So let's look what's changing. The first major update concerns virtual assets. This term now has an official definition covering digital assets that can be traded or converted, such as NFTs and cryptocurrencies. However, this doesn't include fiat currencies or financial securities for VAT purpose. Several activities involving virtual assets are now VAT exempt. These include the transfer of ownership, conversion between virtual assets, and services that keep and manage these assets, including enabling control over them. This exemption is retroactive to January 1, 2018. So, if you've been involved in virtual assets since then, you may be eligible to reclaim VAT you have paid. Taxpayers who deal with crypto assets are advised to review their VAT record since 2018 to determine if they need to adjust their VAT position to or reclaim input VAT. This change provides greater clarity and reduces the VAT compliance burden for business involved in digital assets. Next, let's discuss the changes impacting the management of investment fund. Fund management services provided independently by licensed manager in the UAE are now VAT exempt. These exemption include services like managing fund operations, making investment on behalf of the fund, and monitoring the fund performance. The exemption applies from November 15, 2024. For domestic funds and fund managers, this amendment means that you may now need to reconsider your VAT registration. If you exclusively provided VAT exempt services, you may need to deregister for VAT altogether. And additionally, these changes might limit fund managers' ability to reclaim input VAT incurred for business expenses related to fund management activities. It's significant development, especially for domestic fund manager who will now face new VAT recovery restrictions. Now, let's talk about exports. One of the most critical areas for VAT compliance in the UAE is zero rated VAT treatment for export. With this amendment, exporters now have clear guidance on the type of evidence required for export. There are three acceptable options for export documents. First is custom declaration and commercial evidence such as an export certificate or a clearance certificate from either the UAE or the destination country. Second is shipping certificate and official transport document like air, sea and landway bills. And the third is customs declaration proving a suspension agreement. uh, if for some reasons an Emirati exit certificate isn't available, the amendment allows an alternative document from the foreign country's authorities confirming the receipt of goods. This change prevents situation where missing documents could result in a standard rated VAT charge on export. The zero rating rule for exported services has also seen adjusted. Under Article 31, if a transaction falls under a special place of supply rules, it may no longer qualify for zero rating even if the recipient is based outside the UAE. This amendment takes effect from November 15, 2024. One of the biggest changes is for services linked to goods. For example, if you are installing goods in the UAE for an overseas customer with no presence in the UAE, this installation services is now subject to 5% VAT under the new rule. For lease of transport, these type of transactions are not affected by the new rule. Restaurant, hotel, catering services, these services also remains unaffected by the new rule. For cultural artists sporting and educational services. The new rule applies differently. If the service is performed in the UAE for an overseas customer, a 5% VAT will be applied. For real estate services, the place of supply is the location of the property itself. Real estate services remain unaffected by the new VAT rule. Transport service are taxed where the transportation starts. However, this new rule applies only to certain situations. For instance, if it's local leg of an international transport service and the same supplier perform it, the zero rate might no longer apply. So transportation providers take note for these changes. For electronic and telecommunication services, if these services are being enjoyed in the UAE, they could also be subjected to the new VAT rule. Now let's look at the changes for international transportation services. The amendment specifies that 0% VAT applies only if transport related services such as freight handling and logistics are provided by the same supplier who is handling the transportation of goods. This requirement under Article 33 become effective from November 15, 2024. Uh, this revision aims to prevent situation where multiple suppliers in a single transportation transaction may claim zero rating, which could lead to revenue leakage. Now, let's talk about other amendments. So, first is real estate transactions among governmental entities. Under the new rule, transactions involving the transfer of government building, real estates, or similar assets between government bodies are no longer considered supplies for VAT purpose. This means they are exempt from VAT altogether. The purpose of this change is to simplify the process of government entities and reduce administrative burden. Let's move on to tax invoices and credit notes. Here are the key updates. Uh, Simplified tax invoice can no longer be used for reverse charge mechanism cases. This change means that full invoice must be issued in such scenarios. When multiple supplies are made to the same customer, separate invoices are not necessary. If a summary tax invoice is issued, this is streamlined invoicing for repeated transaction. Business must issue tax invoice within 14 days from the date of supply, and summary invoice should be delivered within 14 days after the end of the calendar month. For credit note, if more than one is issued against a single tax invoice, any subsequent notes must reflect the adjustment made in the previous one. Let's discuss composite supplies. Specifically, when there is no single dominant element in the transaction, if you are supplying two or more equivalent components where none is more principal than the other, the VAT treatment should be based on overall nature of the supply. This amendment aims to clarify the tax treatment in situations where it's not obvious which element should dedicate VAT. For the businesses with partially exempt supplies, the input tax apportionment rule has also been updated. The difference in recoverable input tax previously capped at AD 250,000 can now be prorated if the calculation period is shorter than 12 months. Additionally, the FTA may require businesses to use a special apportionment method, and companies can request to apply the previous year recovery ratio. This provides flexibility in managing input tax apportionment while ensuring compliance with FTA guideline. There have also been important changes to the VAT registration and deregistration process. Business can now voluntarily register for VAT if they can demonstrate an intent to make taxable supplies or incur taxable expense. This provision is especially useful for a startup and new business preparing to enter the market. Deregistration from VAT doesn't absolve businesses from their compliance obligations. If they later meet VAT requirements again, they'll need to apply for a registration. Finally, the FTA now has the authority to deregister taxpayers to protect the integrity of tax system, ensuring the VAT compliance is maintained across the board. The cabinet decision also introduced changes regarding input tax recovery on the employee benefits, enhanced health insurance coverage provided to employees, including coverage for a spouse and up to three children under 18 is now recoverable. This is significant benefit for employers offering a comprehensive health package, as they can now claim VAT on these expenses. If you found this video helpful, give it a thumbs up. Don't forget to subscribe for more updates. And if you have any question, drop them in the comments below. See you in the next video.